Hello, everyone. Welcome back to the Rational Investors Daily Recap of our daily brief. Today is Friday. It's options expiry day. We talked lots yesterday about options expiry, how they were parking the market up. Puts stock market has just made an absolute killing. Whether the calls expire in the money, tough to say. My hunch is that a bunch of them will. But we talked lots about that yesterday, about how a lot of people do covered calls, and that could be retail open interest. And as well, if we look at this Nasdaq chart, this is looking extremely cup and handily to me. I think to a certain degree, the Fed is put back in the box. We'll see how that goes. Anything can happen between now and when they meet in July. But we'll talk a little bit about that in a moment. Just technically speaking, stock market's looking very strong here, and specifically with regard to tech. We were doing a first 2 weeks study this morning as well for the daily brief, because we are coming into the end of the first 2 weeks. Does this past week need to be taken into a bit of context because of the holiday around July 1st and July 4th and such? Maybe. So we'll watch this through the beginning of next week. But so far, the data is leaning towards real estate, discretionary, and of course, communication services. That's all our sort of Google's app, Facebook's, Apple's, all that kind of stuff being very strong. So I have a funny feeling, seasonally, usually the stock market likes to bottom the end of June, beginning of July, and then head into its face rip mode. We did get the sell in May and walk away scenario. Then the market quickly ratcheted back up. And of course, you can see NASDAQ and tech is very strong. So my hunch is there's going to be a bunch of money pouring into this space over the next few weeks. Of course, we got the Fed coming up the end of the month. And we got a whole bunch of, testimony in front of Congress over the next couple of weeks about Mueller and all that. But if we look at the economic cycle curve, real estate outperforming, and then technology and discretionary outperforming. Believe it or not, we could actually head into a period, over the next few months where we actually get a melt up in the stock market. And to a certain degree, what I'm seeing also too out of the bond market, keep in mind bonds are a flight to safety. So we had a U.S. government bond auction yesterday that went very, very poorly, no demand at all. Bond prices came off dramatically. And what I noticed here, and 50% rules and stuff, all us technicians notice these gaps down here. When we ultimately do top out in the stock market and break, it's probably going to be because Wall Street looks over their shoulder and they see that the bond market's not happy at all and interest rates have moved up quite dramatically. So that you can see the two of these with the break in the top of the bonds, flight to safety, and then the NASDAQ breaking out to new highs. It sure looks to me like the economy wants to expand. To a certain degree also too, I think that the Fed has been put back in the box. This red line that you see on the bottom of the chart here is the Fed fund futures, and the blue or teal line here is the 30-year U.S. Treasury. U.S. Treasury yields, especially with this really bad auction that went off yesterday, the spread between the 30 years and the Fed fund futures is very, very wide right now. So I don't see yield curve inversion here on the long end. Interestingly enough, a lot of the shorter dated maturities, 10s, 5s, 2s, their spreads are starting to come back in. And I think the market actually fully believes that the Fed's going to cut interest rates at the July meeting. We will see how that goes. But the long and short of it here, flight to safety is breaking. Stock markets are breaking higher. Fed's been put back in the box. I don't see any signs of recession here. And usually we don't get recessionary signals middle of July. Usually they come in like September, October, November. So get ready for some frivolity in the market. In today's daily brief, we did kind of a fun, we'll transition over to crypto now. We did sort of a fun historical comparison. What did the Nasdaq.com bubble peak look like? And then if we superimposed a Bitcoin chart on that, I've been sort of musing that maybe this cycle, I've been talking, of course, at length in our education programs about how I believe that Bitcoin was this cycle's fear proxy. And in the daily brief today, we took a look at this historical relationship. And frankly speaking, it's quite shocking. Basically, the two markets were moving in almost in conjunction right up to the market bottom. Now, interestingly enough, the Nasdaq, when it market bottomed, this was through the war on terrorism and George Bush and all his cronies. We talked about the oil market and how it behaved through that cycle. So tech didn't really perform very well in the face of that president and the oil market. But you can clearly see Bitcoin has done really, really well here off of those lows. But fascinating how very similar the market bottom actually came in, relatively speaking. Interestingly enough, Nasdaq actually did through the financial asset crisis, and this is what I'm sort of expecting, is we will see Bitcoin come back down and test its lows through the financial asset crisis and that recession 2008, 2009, 2010. Nasdaq did come back down and test these lows. Clearly, these markets have disconnected here. But if we're really lucky, maybe we get sort of a scenario here where Bitcoin can go sideways for a while, kind of like the Nasdaq did. And then into that recession, that's when we actually come down and test these lows. Only time will tell. But today's daily brief, lots of really interesting conversations about how incredibly similar these charts look. Speaking of Bitcoin in the short term, obviously we had a bit of a failure up at the top end of the range. This is the 4-hour OK coin chart. You can clearly see reload zones here. Shouldn't surprise anybody that we did fail here. I've been talking about this on the weekly charts, that I believe that Bitcoin is in a trading range. And right now, Mountain Man stopped the rally on the upside. Big fat round numbers. And interestingly enough, now 50% rules. That's basically where we're sitting right now. But 38.2 fibs on the downside stopped the slide. You can see the big wicks and tails. I still very much believe that we're in a range. And notice that we're sitting right at 50% of that trading range. So in the short term, I've just, on the site, we've been counseling. On the 4-hour basis, we dip down against these key lows. And if we look at things like 1-hour charts, there were some cute little setups. But, the problem here is that on the medium time frame, we've done a lot of technical damage to this chart. At best, if we're lucky, maybe we can get this kind of action where we clean up and start painting. In fact, actually, maybe this kind of action, we start painting W's on momentum indicators. So I'm considering this rally. And, as we're heading into the weekend, we might see as soon as Chicago closes up and the New York boys are gone for the weekend, we could see Bitcoin enjoy a little bit further of a rally. But I'm not really that interested in taking these trades. This is sort of counter to what the medium-term trend is. Algos are not suggesting anything right now. I don't think there's a strong push one way or the other. And what I'm concerned about with taking trades like this, you can see the cute little W that did come in off of here. But the risk reward on taking this long is kind of muted. Actually, here we're looking at 1.5. For 50%. Actually, no, I beg your pardon. That's wrong. There we are. So 50% rule. I could very easily see the Bitcoin price on these forwards contracts rally up into value high. And you can see that's about a 1-to-1 risk reward. So not really worth the gamble, in my opinion, taking this. As I said just a moment ago, I really need to let the dust settle and let these 4-hour charts sort of clean themselves up. Sort of finishing off the thought today, and this is kind of dovetailing with what Julian was talking about yesterday. I think we have to be careful about trusting names that are just listed on things like Trex. But I did do a nice little matrix of markets, altcoins that look like they were putting in weekly Ws. Keep in mind, that's what we really want to try and hunt for, to see a real bottom in the market. And so, names that are multiple listed like OMG, you can see the W trend. I think it actually did confirm here. Walton's listed on Binance and multiple listings. Nice little W coming in. Ant, excuse me. You can see the W. It's on Trex and Finance. Phoenix. There are names like Pinkcoin that are putting in Ws, but again, this is only on Trex, and you could get totally kabooshed by Trex because of their issues right now. So, a name that I do like, and you can see the volume, people are coming in on the buy side on Waltons. This isn't such a bad idea. If you are interested in participating in the altcoins, I'm getting the distinct impression that bottoms are trying to come in on some of these names. And I would highly encourage you to keep really focused, kind of like what Julian was saying yesterday. Let's hunt for those W's. Let's hunt for the signs that the smart money is coming in and buying in size. And let's try and play from a position of strength. Okay, I think that's your summary for today. All the best, and bye for now.